Thank you for coming. My name is Darren, as you probably saw on the promotional flyer, and I do actual US and Singapore, in this case, tax returns. And
Hi, I'm Tim. I'm a U.S. tax attorney, advise on U.S. tax.
as an American living in Singapore, I want to set up a trust. What factors should I consider?
Oh, I'm biased. What do you consider when people probably ask you that?
Oh.
What kind of lawyer should I use to set up my trust?
First thing I ask is, why do you want to trust? Because 9 times out of 10, they were watching some movie or they heard some guy on TikTok. That Lamborghini is because I have a trust, right? And somehow they conflate what a trust offers them. Once we clarify that given their situation, a trust can indeed offer some benefits, we need to be specific about what those benefits are. Typically, it's asset protection and probate avoidance to better succession planning, estate planning, part of a wider estate plan. If they're seeking some sort of tax benefit, chances are that's not going to happen. Most trusts from a US perspective will be tax neutral. It's not about any tax benefit. It's really about the asset protection and estate planning. Now, as to what lawyer should be involved, I guess it depends on where the asset's located, where the beneficiary is going to be, where do you plan to be, and so on. And so therefore, which jurisdiction should the trust be cited? So in Singapore, so people tend to be comfortable with Singapore, and they have quite a sizable chunk of their investments and their assets in Singapore, and a Singapore qualified trust. So a Singapore qualified trust, yes, but because you have a U.S. settlor and or beneficiaries, then a U.S. attorney should definitely be involved.
Because you need them to highlight what the U.S. tax implications are. And I agree, it's tax neutral from a U.S. income tax perspective, but for a U.S. person, they might be able to benefit from asset freezing. Basically, take advantage of, for U.S. persons, they have an exemption for their estate tax. Do y'all know the U.S. has an estate tax too? 40% generally. It's a progressive rate, but 40% is what a lot of practitioners cite. What a U.S. person would do is that they'll do a completed gift trust to an irrevocable trust, because U.S. persons have an exemption amount of which, if your assets are under, you're not subject to estate tax. Currently, it's 13.61 million. Next year, it'll probably be like 14 million. But then after that, it might come back down to 6 or 7 million, depending on who wins the presidency and if Congress does anything to extend this doubling of the estate tax credit exemption. But if not, it goes back down to 7 million. So a lot of people want to take advantage of their exemption now and then use this money to invest in high growth stock. Hopefully they make a lot of money. Let's say you contribute 10 million and then at your death it's like 100 million, right? So all that will be protected from estate tax, all that appreciation, even though you take the hit on your initial contribution. So that's usually the play.